Hello, everyone. Welcome back to Fundrise Finance. The month of September, as everyone feared, did cause a rumble in the markets. The S&P 500 was down more than 4.5% for the month. When you look at the components of S&P 500 for the month of September, it's predominantly red across, with few selective pockets of green, like energy, and a few selective names like Costco or United Health or CVS or Amgen. Overall, very far and few in between were the ones in green and predominantly red. The fear and greed index is currently at 28. That's in the fear territory. When you look at this index over the 1 year timeline, we can see that this index hit 24 in the past week, pushing it into the extreme fear territory, which we only saw earlier in the year during the bank crisis in the month of March. And we have to go almost 1 year back from now when this index was into the extreme fear territory. Now we don't know what October will bring to us, but when the market is in such fear situation, it's actually the right time to buy quality stocks and ETFs. Like the great investor Warren Buffett had said, be greedy when the market is fearful. With all those things set aside, I want to discuss in this video how much my portfolio made in dividends for the month of September. So without any further delay, let's check it out. Starting with my Fidelity portfolio, whose current value is $61,599. In the last 1 month, it has fallen from over $64,000 down to its current value, dropping 4.47% compared to 4.77% of S&P 500. So I would say my portfolio did slightly better than the overall market, though I'm not happy to see my portfolio value go down, but it has given me an opportunity to buy into good stocks and dividends. Now, looking at the dividends in this portfolio for the month of September, we can see dividends from WEC Energy, Pinnacle West, Kroger, which I exited my position last month. So this dividend didn't get reinvested. Then we had Ford, the Devo ETF, Aflac, Walmart, Southern Co, then Johnson & Johnson, the JEPQ ETF, then JEPI ETF, and Cummins, Landell Basel, Sherwin-Williams, Parker Hannifin, Amgen, American Electric Power, and then Target, Rockwell Automation, ExxonMobil, Emerson Electric, Chevron, Walgreens, Tractor Supply, 3M, PPG Industries, then your Prudential Financial, Whirlpool, Royalty Income, Next Era Energy, Interpublic Group, Consolidated Edison, McDonald's, Duke Energy, L3 Harris, VF Corp, the SPYD ETF, and Main Street Capital, then the Vanguard's Emerging Markets ETF, VWO, likewise the International Dividend ETF from Vanguard, VIGI, then VYMI, VYM, KOMP ETF, Qualcomm, Monlife Financial. Because this is a Canada-based company, some part of your dividend gets deducted as part of tax adjustment. Then we have Waste Management and RSP ETF as the S&P 500 equal weighted ETF. Then SCHD giving me the maximum for the month with just under $55, so almost 3/4 a share. Then VTV as a Vanguard Value ETF, likewise VUG as a Vanguard Growth ETF, then VVR as a Vanguard Small Cap Value, then MGC, that's a Mega Cap ETF from Vanguard. So yeah, that's a lot of payments for the month of September. I'll track all my investments using my Google Sheet dashboard. The one we see here is for the Fidelity portfolio. Like we saw earlier, the value of the portfolio currently is at $61,560, currently yielding 4.23% at an annual income of $2,603.54. Now, when we add up all those dividends into a portfolio for the month of September, it comes down to $242.23, which I would say is like what, close to $10 less than what it was in August. Well, that was weird because typically the third month of the quarter is my highest paying month. Now, what happened was few ETFs which should have paid me in the month of September will be paying me in the first week of October. Due to that, some dividends moved from September into October, but that doesn't matter. Looking at the quarterly chart, you can see Q3 at $591.23. Now this line is much larger than the Q2 one because as I had showed you guys in last month's video, I had moved my M1 portfolio into Fidelity. Now because of that, starting Q3 onwards, the lines will be slightly larger than the previous quarters, but over time they will normalize. Now, looking at the annual dividends, the 2023 numbers are at $1,060 almost. The best chart of all, like I keep telling you all every time, the dividends by quarter. You can see here a nice laddered upward growth. Looking at the portfolio breakdown, you can see ETFs at over 31% of the portfolio. So that's like close to 69% in individual stock. So now looking at the expected dividend payments in the month of October. So you can see degrow and they'll be here. Now these two were supposed to pay me in the month of September, but for some reason they moved into the first week of October. Not a problem. I'm not paying my bills from using this dividends. I'm just reinvesting them. So it's fine. Then we have Huntington Bank shares, the IUSG ETF, Coca-Cola, National Flavors, VG Properties, Chubb, Merck, Best Buy, Altria, Amphenol, Medical Properties Trust, Philip Morris, Franklin Resources, Leggett& Platt, Mainstreet Capital, Mondelez, Medtronic, Realty Income, Federal Realty Trust, WP Carey, Comcast, Cisco, Oracle, American Tower, Hadex Corp, Edison International, JP Morgan, QQQ ETF, and finally Toronto Dominion. If I sum up all these expected values, it comes down to just over $135. That should kickstart my Q4 quarter in a nice way. Now coming to the second part of my portfolio, that's Acorns, whose current value is $6,044. In the last 1 month, this portfolio has dropped just over 5%. As I keep always telling you guys, this is my simple set it and forget portfolio where I invest $25 every week alongside all the roundups. It's close to, I would say, $125 every month. I just give a look at this portfolio while doing these monthly videos. This is my tracker dashboard for the Acorns portfolio. This portfolio currently yields 2.1% with an annual income of $127. It is simple 4 ETF portfolio. 500 ETF VOO is at 55%. IJH, that's mid cap at 10%. And IJR, the small cap at 5%. And IXUS, that's the international, at 30%. Well, there were no dividend payments in this portfolio for the month of September. But looking at the expected payments, here we see IJH and IJR, both which should have paid me in the month of September, are paying me in the month of October. So that's a slight shift. And VOO also paying me in the month of October. Overall, close to $17 in payments here. So that should see this graph starting to show up for the month of October and also for the Q4 quarter. Looking at the overall portfolio dashboard, its current value is $67,385, currently yielding over 4% with an annual income of $2,730. Here we can see the overall dividends for the month of September was $242.23. That's from the Fidelity portfolio. But we look at the quarterly chart, you can see overall $675.82. Look at this line for Q2, it was in $543 or something. So close to $132 more. That's good to see. The annual chart we can see here 2023, $1,613. That's like more than $250 more than what it was in 2022, with one whole quarter remaining. So if for the month of Q4, the value is higher than Q3, let's say assuming close to $700, then my annual value should be closer to $2,300. That's really awesome. The dividends growth chart, wow, this is what I intend to see, a nice laddered upward growth. Looking at sector breakdown here, overall ETFs are at 35% almost, and the remaining in stocks like close to 65%. So it's like 65-35 combination in stocks and ETFs. Looking at other dividend metrics like how much is my dividend earning at different time frames, and a monthly it is earning me $227.55. Weekly, it's at $52.51, and daily at $7.48, and hourly, that's like 24 hours, and it's 31 cents. But if I look at a work hour, that's like 8 hours a day, that's $1.31. Now, this work hour value is what would matter a lot as we go closer and closer to retirement. Let's say if currently it's like $15 per hour wage, and let's say 30 years from now, let's say $100 or $150 per hour. That is what this value should be there. You can say that yes, using your portfolio, you can survive on the dividends. I think that's like a long shot down the road. Slow and steady wins the race. That's what we do. So yeah, that's what I wanted to discuss in this video with you all. Hope you found some value out of it. And if so, I would really appreciate if you could hit that like and subscribe button so that YouTube can suggest this video to many more people out there. That would really, really help this young channel. Until we meet in the next video, let's try to do as much as possible to be financially healthy and keep taking those small strides towards financial freedom. And then, see ya.